Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 22nd, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right now the ES remains within a range that is developed at these highs for the most part, and is now also trading inside day to Friday's range. We have a range of about 60% of ADR, 21.5 points, and currently compressing with an upward bias. You continue to see this very bullish Pima trigger zone right here. Any pullback could still be a buying opportunity for a continuation higher until proven otherwise. But the thing about ranges like this is price can stay within these ranges for a lot longer than you think. So even if we pull back, we may bounce and trade and then eventually get our move. But we'll continue to watch the edges here above. The 47.25s again continues to squeeze toward that 48.05, 100% key target above. All right, let's take a look here at the NQ. The NQ remains very bullish. The recent pullback here right off of the 16K level and the 1103 FOMC key level, the one from November 3rd. We've pushed higher now and are trading 650, 16,650 with a shot to continue higher still. We have a 16.9, 100% target for the month based off the lows of the month. So we still have further uptrending price action there. Now keep in mind, this is a holiday shortened week here in the United States with the Thanksgiving holiday. So we will likely see lower volatility. Never sell a dull market. You definitely tend to see a quiet uptrending price action for the most part day over day unless something significant occurs. So again, the expectation is for further upward trending price action. Any pullback could be an opportunity to defend. All right, let's take a look here at crude oil. With crude now, again, we've seen quite the pullback with crude that has basically extended lower. It has not found a full-on strong low yet, no strong rejection. Instead, price has continued to see new lows and lower highs throughout the entire push lower. We're approaching the previous month's low now, which up here it fell shy of the previous month's low in 2 rotations. Here's the previous month's high rather. Now here's the previous month's low coming into play. Perhaps we see a flush through that zone. Again, the key level that we continue to watch is 75.52. It's the top of the key range that goes back this way. If price can hold that zone, generally speaking, we may trade between 75.50 and 80 for a bit. A failure to hold 75.52 could extend this thing back toward 70.27. So we're still looking for a strong low out of crude oil, and until that happens, we may continue to see downtrending price action ahead. All right, here's a look at gold futures. You'll see gold futures developed a very narrow multi-day range here, which we quantified last week. The expectation was for a move of about 100 points, and right now you can see the upper 125% is about 83, 84 points. So between 80 and 100 points of range could be seen ahead. If the top is in, say 1880, then that means we could continue to push downward toward 1800 to even 1780 on the downside. Remember, gold has not been very good about maintaining gains after strength. Anytime we see some strength, we see it sell off, strength, sell off. Even this was a long-term move, sell off, etc. So after this move, is the market going to be able to find a way to reject on these lows? If so, a major rejection here and a buy signal could get us higher toward 1900 and the next resistance above 1920. But right now, again, this market has had a failure of maintaining those gains after rallies. To fail to get back above 1840 and especially 1850 would suggest further weakness ahead to 1800 and 1780. So we'll see if rejection develops off of these lows today. Otherwise, we could be looking at further movement to the downside ahead. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.